YouTube. We should be live on Twitter. If you're listening or watching the recording, welcome. It is Tuesday, March 28th, 6 p.m. Singapore time, 12 p.m. Europe time. Europe had time change over the weekend, and it should be 6 a.m. morning Eastern Standard. So drop in and let us know where you're coming in from. I hope you're doing well. I hope you're kind of navigating the craziness in the markets right now. And that's going to be the topic for the day. Three major topics. If we kind of want to summarize it, obviously we're going to start with Binance. We're going to discuss a few of those things. Thoughts, how is this going to impact the crypto markets? Is that the end of Binance? Should you be withdrawing your funds? We're going to be discussing this a bit. We're going to reflect a bit big picture on Q1. It was one of the most bullish quarters we had, especially for Bitcoin. Altcoins really lost out majorly against Bitcoin. Bitcoin was the sheriff in town in Q1. And then we're going to look into Q2 and see what could good fortunes bring to us. So with that, dive in. Fabio, welcome back as always. Head of Community, Cake DeFi. Glad to have you. What are you seeing? How's the sentiment right now? Give us a bit of the bird's eye view to kind of start off with.
Yeah, happy Tuesday, everybody. There's this meme where Homer Simpson is in his nuclear facility, and there is like this number behind him, days without an incident, and it really feels like that. There's always something, at least since, I don't know, almost a year. I think a year ago it all started, maybe 10 months ago, and consistently there is something else and something new. Yeah, I guess the biggest thing in town, the biggest topic on Twitter is the 74 pages lawsuit that the CFTC filed against Binance and its associates. What is a bit surprising for me, and maybe you have some insights on that, is why the CFTC is doing that and not the SEC, because I'm not very familiar with US law, but I was expecting something, if something would come, to be from the SEC and not the CFTC. Do you have any idea why it comes from the CFTC?
So I only had a really quick chance today, other than following a little bit on Twitter, following a little bit on Chatter. So I dropped a quick message to a lawyer friend here in Singapore that I've been, like, I have known him actually, I don't know, probably 5-6 years. And so he definitely has a strong idea on US law, security law, commodity law, and so on. And I very quickly kind of bounced that over to him and just wanted to have a little bit of his thoughts. And we can address this a bit down the line. From what he shared with me, he didn't say, so I want to be very clear, he didn't say that this is a targeted attack on crypto. He just says that for him, when the CFTC comes in, the reach and the impact the CFTC can have is way stronger for a foreign entity than the SEC, because, and I obviously wasn't aware, I mean, I was aware of it, but I wasn't consciously, actively aware of that. Commodities are being traded all around the world. Many of them actually have markets, for example, in London, which are outside of the US. So the CFTC, which has commodities as part of the entire regime, their reach can be global. They can go and they can actually really go after companies that are all around if they are in commodities trading. And so they can basically really put punishments on way further beyond the US's territory's reach, where the SEC is regulating securities, and these securities are trading on US soil. So, for example, Apple shares or Tesla shares, they only trade in the US. There is no other market. So for them, it's very, very easy with their regulation. And so he didn't say that, so I want to be very clear. So I'm making my own little interpretation here. But the way he kind of phrased this was just that the CFTC doing that has a potential way more global reach than if the SEC would be doing it. So I don't know. I don't know why the CFTC is doing it, but if you have a bit of a conspiratorial kind of view to this. It could be that, the US understands if they would be sending the SEC after Binance, then Binance, like, those pictures where CC has his 4 fingers and then they remove like 3 of them and he has this middle finger left over. I think Binance would have this middle finger left over and be like, I don't really care. But I think with the CFTC, the worst case that could simply be is that any company that needs the CFTC could be pushed towards not working with Binance, which would obviously be dramatic because all banks and I don't know what need the CFTC. So that would simply mean that Binance is done. So again, so I just wanted to throw this in.
Perfect explanation. At least I understand it quite a bit better. The other maybe 2 things, or I skimmed through the 74 pages a bit late last night, and like there's maybe 4 or 5 different things that stood out to me because I wanted to see what is this all about. Where are they practically pinning this on? And so it is mainly regulation. They're pointing out that Binance was offering leveraged products on US soil. And even though the regulator kind of pointed out to them that they were not allowed to, they didn't really go the extra mile. And it was still... That was my
bad. I mistakenly clicked the wrong button with the mouse.
No worries. And they were still offering leveraged products on commodities. And there is a few funny things that stood out. So the CFTC is derivatives and futures as well. So they were really pinning this on futures and derivatives. And they were naming Bitcoin, Litecoin, and Ethereum as a commodity, which is kind of unexpected, especially Litecoin and Ethereum it was not really clear. And then, sorry if I kind of elaborate a little bit more, because the SEC, the other US entity, they were kind of hinting at Kraken that Ethereum might be a security. So they're kind of 2 agencies that contradict each other. And then the other 2 points were they were accusing Binance of market manipulation, of wash trading, and of terrorist funding. And they were naming 2 terrorist organizations, the Hamas and a Russian organization, in that report. And where there was buying of weapons. So these were, I think, the main points where they are really attacking Binance on. So an unauthorization of offering products with a leverage on it, wash trading and market manipulation, because they have like 300 in-house accounts where they did trading. CZ already came out with an answer to that, and he said, yeah, look, we kind of need to sell crypto, and we do that with these accounts. And he hinted at some features and some things that they have in place to kind of circumvent employees taking advantage of the platform and of their knowledge. So we don't really know what's true and what is not true, but they're definitely going hard. Lots of accusations.
How's the community reacting so far?
So I got like maybe 2 handful of people reaching out to me and telling me, hey, do I need to be worried regarding Binance? And there is definitely, so there's 2 sides and 2 different kind of people. So there is a lot of people that burned their hands and had bad experiences with Voyager, Celsius, FTX, and so on. And they're super anxious and have like this PTSD. And then you have others where they see it kind of nuanced, because it's not the same thing. Like Binance is fairly transparent. You can go and see they have 6 figures of Bitcoin, very transparent. You can look on chain and see they have their funds. So it's not the same situation as FTX. It's purely that they were kind of doing regulatory arbitrage and kind of moving away and around the regulators. And now there is this head-on collision where the regulators say, okay, no more hiding, no more moving around the bushes. And they, as far as I understand, they kind of have 2 options. They kind of retrace and backpedal and go back, or they confront the regulators and they say, hey, we have nothing to hide. Here are our books and come and look. I think these are maybe in general the two ways they can approach it. But then this is probably a topic that you can answer a lot better than I do.
Is the community more supportive of Binance? I mean, I saw some accounts, right, who got super triggered by the alleged, we have to say, right? I mean, all these are allegations from the CFTC. Obviously, I also want to mention, right? I mean, CC coming out there making such a statement, I don't know, to me that means nothing, because unless there is some facts or some evidence that he can provide, right, it's basically statement against statement. I mean, we very critical of the CFTC, of the US in general right now. So obviously we take this with a grain of salt, because we are like, yeah, sure, you're just trying to shut down crypto's largest exchange right now, and you're just kind of making shit up as you go. So like, I understand that we are all very critical of that. On the other hand, right, it's also very difficult for Binance to actually prove those things, or prove that they are wrong on the other side, right, without actually releasing everything. So yeah, I mean, it's but I see these accounts, right, that go and say, oh, CC, you are like the one who traded against us, right? And then on the other hand, obviously I see a lot of people who come out and say, yeah, this is exactly like the CFTC. They're just doing this because they're in the US. Do you see a bit of a balance here? Is this like, are there, like, which side does it sway on right now, or is this quite balanced?
I would actually say it's quite balanced. You have these accounts like, for example, Bitfinex, that is calling out actors. It's like his thing, his stick. And you have other people like analysts that are calling out Binance since a while, and they kind of feel confirmation right now. They said, oh, see, I told you so. And then, of course, Binance has a very, very strong community, a very big fan base, and still a lot of people are supporting CZ. And there's like, so Bitfinex, the Twitter account Bitfinex, he also went back and did some research on CC, and CC was working for another company. It's called OK Coin previously. They were involved in heavy wash trading as well. And here he looked up some statements that CC made. And while CC was at the company, he practically said the same thing as he said right now. There is no wash trading. And then when he left the company, he kind of confirmed that there was wash trading and there was manipulation with bots. And this was kind of his thing. Like, he was very proficient in setting up these bots and making this all work. So a lot of people feel, okay, he's doing the same thing right now. But then on the other hand, he's a very high-level strategic thinker and a good tactician. He put out some tweets a few weeks ago where he said, or kind of hinted, that this is all happening. And he said more FUD will come, more regulatory attacks, and so on. And now he kind of confirmed this. So he's playing it kind of well, I would say. And the views are pretty balanced, at least from what I see on Twitter. Yeah.
Interesting. Yeah, I mean, we also had a bit of an internal legal and compliance discussion just to kind of analyze this a bit, right? And also, I mean, interesting. So on our lawyers, they kind of said exactly the same thing as actually my other lawyer friend. The example that basically everyone was giving was the SEC is more like a shotgun approach. So they're like, you know, we just take a shotgun, chuck, chuck, bam, and we just shoot, and either we hit something or we get everyone scared, and then they kind of like settle with us anyways, right? So they are really more like this, and we see this, right? I mean, the SEC right now is sending Wells notices. It's super unspecified. In my opinion, then, you know, Coinbase is standing up and saying, hey, I'm not going to let you bully us. We're going to actually stand up to you, right? You're not scaring anyone. Kraken, they settled, right? And a lot of these projects and so on. So that's more of the SEC approach. The CFTC approach, and the word was quite interesting, both like in-house and external. The word that they were using is more like a sniper approach. So it's really more like, if the CFTC gets involved, they have all the evidence. They know their stuff. Their success rate is insanely high. And they're like, now you got this red dot on your forehead, and they're just ready to pull the trigger. Very different, right? So they don't go in with the shotgun. They just really pick their targets well. And so that was interesting, right? Both said this independently. Obviously, I'm not an expert in this at all. I am not experienced in this. I'm just really kind of just copying these words that we had discussed in-house and I got from an external friend. Yeah, I don't know what you see out there regarding these kind of pictures being painted. If you see something similar, do you see stories in there?
it's definitely a lot of questions that are being raised, and we can see that on YouTube as well. A few people are dropping comments that, yeah, are funds on Binance safe or not? And of course, with both sides, if you say, okay, they are safe or they are not safe, you're kind of going out on a limb. But just my honest opinion, and I might have a big bias there, why should you leave funds on an exchange? You either put them on a platform like Cake and get some cash flow on it, or you take them into cold storage. That's just my view. I don't know, because why should you leave them on an exchange? Okay, if you want to trade, sure, but if you want to hodl, either go and get some cash flow or take them into cold storage. These, at least,
or do both. Yeah, or do both.
both.
I'm a big believer always in diversifying, doing both. It shouldn't. I'm a big believer in the and, not the or here. Yeah. Yeah,
but yeah, of course, what you need to give to CZ is he was right with number 4, and that's also the memes where they kind of meme him with with all these hands, and he's also
sure. Then I mean, my statement on this is it's easy to be right if you know more than everyone else, right? So who knows, right? I think one interesting thing, and I just want to kind of remind everyone, so you can look into the very early episodes we did in January. U-zyn, I also did a meetup in February. By the way, there's another one coming up mid-April here in Singapore. And in the one at the beginning of February, we did like a preview of 2023. And I had this one topic, which was like US regulation. And in there, I talked about 3 companies that I see really falling this year for totally different reasons. And I highlighted that, right? So I spoke about the entire Genesis, Grayscale, digital currency group. I mentioned that this was a domino effect. At the moment, this domino is shaking, but it has definitely not fallen. The second one was Silvergate. For me, that was more of a regulatory kind of issue in the US. And I didn't predict Silicon Valley Bank. I didn't predict Signature Bank. I want to be very clear. For me, this was just Silvergate. And the third one was Binance on there. And Binance was not because of being illiquid or being a domino. Binance was purely because of money laundering, of some of these allegations that were always swirling around, right? And these allegations, and I always said that this is gonna really be difficult for Binance. And I hear this whenever I speak to someone, when I talk to anyone at the bank, when I talk to any regulator, and we talk off the record and we discuss these things, always the same topic around Binance comes up. And so, I don't know. I don't think that surprises many. I think what does surprise many is how aggressive this case is now being done, right? And I think, so there's a couple of things from what I have seen kind of really scrolling through this, right? So obviously, I'm definitely not an expert on those various cases. And to me, I'm not an expert on what is legal, what is not legal, because I'm not a lawyer, right? I'm a CEO in a company. So I just look at this, and I look at this from a different perspective, right? For example, I look at this and I see, yeah, they really helped. They seem to have helped illegal actors got on the platform, right? So I reflect and I'm like, okay, are we doing this? And I'm like, no, to the best of my knowledge, we have a really, really tight network with compliance and so on. We shouldn't be doing this at all, right? I think we are really, really good on this. Okay, so I'm just kind of looking at this way. Trading against customers, we don't even have trading. And when we have a swap, it's always done via decentralized exchange, right? So there's no way to do anything there. So I'm just looking at this. But now where it gets really interesting to me is how they are going and singling out everyone, making it a prisoner's dilemma scenario on who kind of goes down first. Because they're taking CC, they're taking, I think, Sebastian Lim, or Samuel Lim, who is the compliance officer. Then obviously they have the board, right, whoever that is. Then they have the investors, because they pick out the various companies, right? So it becomes very interesting to kind of see, okay, who's gonna, I don't know, maybe someone's going to take a plea deal, similar to what happened at FTX, right? So there's just a lot of like game theoretical things now that's going to be quite interesting to see going forward, right? Or how tight of a ship does CC have, where everyone knows actually, hey, we're doing well, like we're doing everything right. Everyone knows this, everyone is convinced of that, and everyone is kind of pulling into the same direction. Because if this is not the case, right, let's say they have done everything right, but not everyone is convinced. There's going to be a party that immediately breaks out and says, hey, listen, I'm willing to cooperate. Let me know what you need. I can give you everything. But in return, I'm going to get preferred treatment in whatever is going to come out, because I believe I did nothing wrong, but I want to cooperate because I don't think we did anything wrong, right? So this could be investors, could be board members, Mr. Lim, CC, and so on. Who knows, right? So this is quite interesting from an entire kind of game theoretical perspective. Obviously, it gets crazier if they know that they did something wrong, right? Because then it becomes very tactical. And then, yeah, that's just going to be an absolute key thing. I don't know. I at this stage, I wouldn't be worried if I had funds on Binance. However, I also don't see much reason on having funds on Binance. So I want to be very clear. Neither myself personally nor our company have any meaningful amount of funds on Binance. So yeah, again, unless you have some very specific reasons why you need to do this, I just want to be very clear and ask you that question. What is that specific reason? Like, why would you need funds on Binance right now, right? Why wouldn't you move them to Coinbase, to Kraken if you want to have an exchange? Why wouldn't you move them to us at Cake if you want to get cash flow, right? I don't understand that. Even if Kraken has had issues with the SEC, or even if Coinbase is maybe putting up a fight against the SEC, the one thing that I would very much doubt is that Coinbase or Kraken becomes insolvent. I wouldn't see this at all, right? And I can assure you we are not insolvent. We are also 100% solvent. You can actually see this on the proof of transparency. So on the transparency proof. So yeah, these are just a bit of my thoughts. I don't know, Fabio, what other points you see sticking out? What are things that people really tech on that, I don't know.
I feel 100% the same way, and I think you used the perfect term for it. What is the reason why you would keep holding a significant amount of funds at Binance? And I'm 100% aligned with you there. I like Binance. They have a very broad offering. The app it's maybe a little bit clunky, but it's a good exchange, and they had an exceptional service until now. They try to be transparent. In my opinion, CC is not a malicious actor, and Binance is not a malicious company. What they are doing is clearly they're doing regulatory arbitrage. They're trying to move around the bushes and don't step on the regulators' toes, and they did an exceptional job at that worldwide.
Would you stick to that opinion if it turns out that they had, I mean, there was these allegations, right, that they have 200 accounts with market makers who are trading against customers? Would you stick to your opinion then, or would you then say, no, this would change your opinion? Or would you believe that, yeah, maybe they have done some illegal shit with some money laundering, but yeah, I mean, so what? Which bank doesn't? In this case, who cares that they did? They moved millions where the banks are moving billions, right? They're using this arbitrage, good for them. They helped crypto grow, but you don't believe that they did this trading against customers. I don't know. Give me a bit of your view there. Or so would this change it, or you wouldn't care? Like, even if they are guilty of all the charges, you're like, no, look, they're net positive, doesn't matter, they did good, they're forced for good, and so on? Or would you see it a bit more nuanced?
So trading against customers would be an absolute no-go. So if they really manipulated the price and order books and so on, and manipulated the price of certain assets to the upside or to the downside, that would be a no-go for me. You can do, I know what they call this at other exchanges, they call this voluminizers. So if you do some market mating and some wash trading just to increase volume to look better, okay, then nobody actually lost money. It's just a little bit of a weird practice to attract more attention and customers and so on, which I would consider to be in a gray area. But if they really traded against their own customers, that would be an absolute no-go for me. And then I would not consider them a net positive anymore, because that goes against so many ethics. Yeah, but like I try to stay positive and see good in people, and I want to believe that Binance wants to be a good company and wants to do good. With the things, money laundering and terrorists funding and so on, I don't know. Like the accusations are pretty strong, and there was a mention that I think the CFO or some high level finance guy that they kind of knew about this, and in internal communication he kind of said, yeah, we're gonna close an eye and not really look. Yeah, I don't know. Like, I want to believe that Binance is just a company that wants to do good, that wants to grow, and kind of came into the crosshairs of the regulator, which was inevitable. Like, they're the gorilla in the space, and they did an exceptional job at staying out of the crosshair. Now they're in, and let's see how it goes here. It's going to be tough, especially in the US, because they clearly overstepped their boundaries when it comes to leverage trading, because the US already told them that they're not allowed to. And they did this in several different countries, and they have these elaborate legal structures where they have like Binance US or Binance Singapore, and then another holding that is in another jurisdiction, like in Dubai. So they kind of thought they were super smart. Now we are going to see how smart they were, I guess.
I agree with you. I mean, if Binance turns out to be more like, let's say, an Uber, right? An Uber, I mean, definitely tricked regulators. They definitely did a lot of illegal shit, right? And I mean, if you want to watch this series, I don't know where it was, on HBO or Netflix or somewhere, called Super Pumped, also a great book to read about. I thought it's a really great series that kind of explains that. But I think at the end, we all agree that these ride-sharing companies are a net positive for humanity. So yeah, but then obviously if it's more like I know, a Theranos, for example, right, then obviously then is definitely the wrong way, right? So but probably like Theranos is more like FTX. I don't know if there's a good example here. Maybe WeWork would be a bit of an example where just a lot of people really lost out with yeah, some questionable statements. But how do you think this all is going to turn out? What does the market expect? I mean, crypto went down slightly. I don't think this was honestly, on this news, I don't think the crypto market reacted all too bad. Couple percent down. I mean, this can be a deal. I mean, this can be also a normal price swing. I could just, let's be clear, right? Yes, the market is down. This is very difficult to say if this is correlation, causation. Who knows on this? I mean, this was a couple of percent. I think it would be different if we were 20% down, but like being 2, 3, 4% down, I don't know if this is all too dramatic. How does the market kind of see this right now? What are their if-then scenarios?
So dubious speculation here. I'm not in the room. I don't have any special insight, so extremely dubious speculation. But there's a lot of people, I see this here in chat and on Twitter as well, where they're going, oh yeah, if Binance goes down, this would be really bad and it would take crypto down. And I don't expect this at all. This is not going to be an FTX. This is not going to be a bank run and an entity that is going to be insolvent and illiquid. This is not going to happen. And the market the market is aligned with me, I would say, because we had a drawdown of like 5% and we're already recovering with pretty hefty news. So what I think is going to happen is Binance is going to be pushed out of the US completely, in my opinion. And they're probably going to need to pay a lot of money in some kind of fees, in some kind of settlements, whatever. And there might, I'm not sure if they can ever offer their services in the US again, but you look, and here comes the conspiracy that tinfoil hat had Fabio out of the bushes and says, the US wants to have the business within the within the family, within the country. They want to push BlackRock, Fidelity, NASDAQ, Coinbase, US-based companies where they can get a tax share, where they can have oversight, where they can have regulation. They don't want this dubious, shadowy entity that is all over the world in Dubai and so on. They are going to push Binance out, and they're going to put some heavy fees on them. And Binance has a lot of money, so Binance is probably going to pay and kind of staying out of the US afterwards. That's my dubious speculation that I'm expecting this to play out. But I don't expect Binance to go down in flames. There's a lot of other countries where they have a lot of market share and there's a lot of liquidities in other places of the world. So that's my 2 cents.
Yeah, okay. I mean, again, I had a bit of a discussion internally on that. So how would this play out, right? I think, obviously, let's say 2 major strands going down. First one, let's say 3 strands. First one is Binance just ignores it, right? Could be Binance just doesn't care. It's like, hey, we're not in the US, no F's given, do whatever, right? Like, we stopped the US business, we're moving away. Neither CC nor Samuel Lim is gonna go into the US. I don't know, stays in countries that don't have any extradition with the US, I don't know, that could be an option, right? Personally, I think this would be a very challenging option because very likely this would mean that the CFTC is going to take this as a complete win. They're going to just win this. And I think what people really forget is that the CFTC, because of this commodity reach, can then simply go, just like it would go if it notices that there are companies who are manipulating the gold price, or there's commodities who, I don't know, manipulate wheat prices, right? They would simply go and say, hey, there's this one company in London, company ABC, they're manipulating the gold price. If you're doing anything with this company, you cannot, like, you're not going to be licensed by us. You have no chance. So what's going to happen is pretty much anyone that wants to do anything with the CFTC is going to shun this company, right? So the CFTC would instantly do this with Binance, and it would basically put Binance into pieces because they would have zero banking relationships. Anyone, right? No custody solution, no one that anything has anything to do within the US is going to, like, they're going to cut ties with Binance because the risk is just way too big for that, right? So I highly doubt that Binance is going to go this route, right? So let's go the extreme other side. The extreme other side is Binance is going to react and they're going to say, you know what? Let's fight. I think you're wrong. I'm right. And I think that's a difficult one simply because the CFTC is a huge advantage here. Huge, right? Because Binance would have to open everything, right? They're going to start putting out their stuff. I think we all agree Binance has a lot of questionable stuff in there. Let's say we all hope, right, the questionable stuff is better for humanity and it's not about like hurting humanity. So we are on their side. But I do think that we all agree that we don't want Binance to ever reveal all this stuff to the regulator, right? And probably Binance also doesn't want to do this. But let's say they did, then obviously it really comes down to does Binance have a chance in winning this or losing this? This would be a year-long battle. Them losing this is going to be the same as what we had just discussed before. Obviously, them winning this is going to be groundbreaking, right? That would be absolutely groundbreaking because that would simply put a huge middle finger towards the CFTC, to the US. That would be massively bullish. And I mean, this would be a year-long fight though, right? I just want to be clear. I do think if Binance really gets put into pieces on option one, it really is going to come down to on where else is this trading going to happen? Where else are these funds moving? Does Binance have to sell anything off? These are just a lot of questions that are going to have an impact on the price. So let's talk about, to me, the most likely scenario. Obviously, I have no clue what's going on in there. I have no idea what CC knows, doesn't know, what their situation is. If I would have to be betting on this, I think what they are going to do is they're going to try to get a settlement with the CFTC, right? And I saw tweets already where like, the settlement is super easy. Binance pays a couple millions and they're going to be off the hooks. I think you got the wrong letter there. It's B for billions, not millions. It's billions, right? I don't see this settlement being in hundreds of millions. I see this, if they're lucky, they don't go over 10 billion, right? And the reason why I think it's if they're lucky, it stays under 10 billion with a B is simply on how the entire attack is phrased. It's phrased on total revenue, on transaction numbers, and it's just going to be brutal because the CFTC doesn't care about profits. They're going to care about revenue. And I just want to be very clear. Binance since 2017 was basically printing money on so many instances, right? So you can just run the numbers on this stuff. It's unlikely that Binance made less than $10 billion. I understand, maybe not only from the US, but it's just going to be insane. They're going to just blow this up massively, right? So I think Binance is going to make this a win if their settlement, it has a few things. First of all, they don't touch US anymore, but they can operate as normal on the rest. And all the companies that have a CFTC association are fine in doing business with Binance. I think that's going to be an absolute key thing for Binance in the settlement because otherwise they're toast. Second thing, no admission of guilt. So that's a key thing. Neither CC nor Samuel or the companies are admitting to any guilt. That's really, 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 really key. And it's really, really key going forward as well, because otherwise it's going to be so difficult for Binance, for CC or anyone to ever do anything again. It's just so difficult. And yeah, then the third one is the negotiation on the money. And the CFTC, so the question is, why would the CFTC settle if they know that they're going to win? To me, that's probably simply going to come down to speed. The CFTC is not stupid. They know such a lawsuit is going to drag out for years. For the CFTC, it's way more powerful if they have a quick win in the pocket. They're going to scare everyone else shitless. They can settle on a huge amount. They don't really care at the end if CC or Binance or someone admits that they're guilty. They just want them off US soil. They want a big chunk of money. They want to have this huge scare thing. And that's what I hope at the end is going to come out. And now, let me conclude with one thing. What does this mean for price? Obviously, it really depends on how long this takes. And then the question is, where does Binance have that money from, right? Is that money today billions of dollars? Do they have this in stable coins already? Do they have this in actual dollars? Do they have to sell Bitcoin for that or Ethereum? These are the only two assets probably they can sell in order to get that kind of liquidity relatively quickly. And what's the market like during that time? Obviously, if the market is in a massive bull run, no one really cares. I think right now, when it's very vulnerable, probably would be a bit more sensitive. So that's kind of the kind of thoughts here. I don't know. Anything from your side? Anything that you see different? That is an aha moment for you, or anything that else that you have heard?
There was definitely a big aha moment when you mentioned that they're kind of, if they would retreat completely and practically say we're not going to interact with you in any way, that the CFTC would probably shut them off and saying other companies wouldn't be allowed to make business with them. This was definitely an aha moment, something I haven't seen on Twitter and something I haven't thought of myself. And it's pure logic. But for the rest, I agree, and it's also it's kind of a positive outcome. Sort of a positive outcome for everybody, because I always ask myself the question, what does the regulator actually want? And of course they want to have a few things. They want to have control, they want to have oversight, and they want to get some share of what's going on. And with what you just said, the incentives are aligned with your view, and I believe in incentives.
Yeah.
They want to have a fast solution, they want to have money, and they want to push them out. And with this approach, they kind of get everything. They are not invested in a personal agenda. They don't have beef with CZ, and they couldn't care less.
Beef with CC, I think they couldn't care less. Yeah.
So what do they want? Where are the incentives? And where is the money? I think it comes down to these things, and you summed that up perfectly. So and it's also
sorry, continue.
It wouldn't be that bad, as you said. The risk for volatility or price risk would be, how much does that cost? Is it north of 10 billion, and do they have the liquidity? And here as well, I try to be positive, and CZ is a smart man. He knew that eventually the regulator would be on the doorstep and they would target Binance. And if he didn't set aside a decent chunk of money, especially for an occasion like that, he definitely did. The question is, did he set aside enough? But he's a smart man. Like I think I saw this on Twitter that somebody mentioned he has like an IQ of 145 or so. Like he's a really, really smart guy. And if he didn't see that coming, I don't know. So I tend to be optimistic there as well. But yeah, let's see how big the chunk is that they would need to pay in a case of the settlement, and if they are liquid enough.
How do you think all of this ties into how you remember Q1? I mean, price-wise, Q1 to me is completely different on like some of the events in there. I don't know. How do you see those last 3 months?
Nobody, maybe somebody expected this. I didn't. For me, Q1 was surprisingly bullish very early. I expected some bullishness in the later part of the year. I didn't expect it in Q1. And of course, everybody comes out of the woods now and is accusing CZ of maybe or maybe not being responsible for this price pump because there was some action with BUSD, and he hinted, or some people even thought he was short Bitcoin and kind of turned around in the 20,000 areas, and that this helps providing him with the liquidity that he needs. There's a lot of conspiracy theories going on there. But for me, the title on Twitter, at least, of this Cake DeFi Live was that Q1 was surprisingly bullish, and if Q2 is maybe not so bullish. And I could definitely foresee a not so bullish Q2, just because Q1 was a surprise. Like, we're up like 90% from the bottom, which is crazy. There is so much uncertainty going on with, you know, the banks, with Jay Powell that is surprisingly confident, with Elon Musk hinted at this, and we might have some time to touch on that as well. He sees like the biggest risk right now in commercial real estate.
Of course. I mean, I don't think that's a surprise. I mean, I don't know how often did we talk about real estate here. Like, I think we talked about real estate a year ago or something. It's like, hey, this is the key thing to watch. Yeah.
Yeah. So yeah, it doesn't look so good for Q2 actually. And the markets we're holding up fairly well. Like what bothers me a little bit is, with all these turmoil, with all these things happening, as in the crypto space, as in macro in general, the S&P is like down 3.5% since the banking crisis started. And then we're talking about a probably systemic banking crisis, the Credit Suisse, the signature banks, and all of and the S&P barely moves. Jay Powell holding up and being confident that rate even is hiking during all of that. And the S&P barely moves. It seems crazy to me. So I kind of try to manage my expectations, and my expectations are kind of in a red Q2, I would say. I don't know what you think.
Yeah, I think a couple of things. I mean, I'm someone, I know, like when people listen to Fabio and myself, they always think that, you know, Fabio is like the only one bullish in this company, and Julian is actually like, why does Julian even run a crypto company? He's so bearish. It's not true at all, right? I am super bullish on crypto. I'm just someone who doesn't believe that you should be all in on crypto. I do believe that crypto has cycles, and I just always want to be careful. I definitely don't want to be that person that says go all in crypto and then you lose 60% of your funds, and I don't know, your entire wealth gets shattered, because exactly when you lose those 60% of your funds, then you need to sell because something key happens, right? So I just always, that's why I always try to be a bit more on the cautious side. But look, I'm long crypto. I own crypto. So far, it was a fantastic year for me personally on my personal portfolio, right? And that wouldn't be the case if I weren't significantly invested in crypto. I keep dollar cost averaging. I think that's the right approach. To me, Q1 is still super surprising bullish. I'm trying to ask myself, why are prices up despite the fundamentals really not doing so well? Tech is up. The Nasdaq is up. It's the only index that's actually up this year. So the other markets are not doing that well, right? Gold is up. So it's quite strange, right, to kind of look at what's up. So on the one hand, you have like safe haven gold actually hitting an all-time high. Then you have tech doing well as the only kind of group of shares. So if you look at all that, right, it makes sense that crypto is up. It does make sense. Because obviously you have some people really with that narrative of Bitcoin is the safe haven, digital gold, right? So that makes sense. And then some people saying, hey, crypto is risk on. So with tech being up, so I think it does fit that narrative, right? So I think that makes sense. The question, is it appropriate for being so much up? And this is just something I'm not 100% sure, because to me, I see actually, other than that, I see only two reasons on why cryptos, and especially Bitcoin, is up so much. First of all, because there was so much stablecoin selling and so much stablecoin rebalancing, and we've seen that, right? The data is super clear on that. And the other thing, obviously, Michael Saylor bought from mid-February till like mid-March or something, and I think he bought a couple $100 million again. So that definitely drove that, right? I would probably throw in, and I'm not 100% sure if that long-term is so good for Bitcoin, that Saylor is someone who is in the US on top of that, right, to accumulate so many Bitcoins, right? I'm not 100% sure this is actually the best thing that can happen to Bitcoin. But that's just a bit of like, I don't think that's a concern right now. I don't think that's a concern now. This maybe becomes a concern later, right? That there's someone in the US, a company that has so many Bitcoins on their balance sheet with everything that's going on, right? So I don't know. But so these are, to me, two main reasons. And my question is then just, I mean, retail didn't crazily buy. You can look at the Google searches. You can look at all these searches. Crypto is definitely, like, retail is definitely not back. There are the existing crypto people who have bought, sure, but there's not like, it's not like people joining the kind of tribe now. It's not happening. And institutions also, like the known institutions, are also not net buyers. So I just struggle a bit on where this crazy pump came from, right? And so I do believe that there may be some conspiratorial kind of ideas appropriate in all that. And that brings me to Q2, right? Q2 has ETH unstaking, Chapella, 12th of April. It has May with the Grayscale loan that is going to, or actually Genesis Digital Currency Group loan. There's like $500 million that need to be paid back. And that's going to be a big question mark where this liquidity is coming from. Some people are saying the reason why the market has been pumping is because Digital Currency Group has been manipulating. Not sure, right? These are just pure speculations in all this. So there are some major events that are coming up. Sorry. Yeah, but Mt. Gox is way later, right? Mt. Gox happens in end of Q3, beginning of Q4. So I don't think we're going to see Mt. Gox until Q4, actually. So I'm not sure about Q2. There's the big flip side to that. And the big flip side is I belong to this group of people who think that this balance sheet being suddenly increased by, I don't know, $400 billion now on the Fed, I think that's very insignificant. It's very irrelevant. And the reason why I think so is because these are different kind of assets than those assets that were added in 2020 and 2021. In 2020, 2021, this was very clear buying bonds, putting a push into the market and putting bonds onto the balance sheet, where then these fresh dollars that were basically traded with those long-term liabilities, these people then bought stocks with that. And then the people who sold those stocks said, hey, great, I have so many extra dollars, bought crypto with that. And so that was this massive pump in 2020, 2021. These dollars that are being added to the balance sheet right now, they are not a push at all. They are purely a pull where they put this backstop as liquidity. Now, I'm not saying, and now comes the key part, I'm not saying this couldn't turn into a pull, into a push in Q2. I'm just saying, in my opinion, it wasn't really so far. And so that is the key thing when people ask me and say, hey, Julian, like, there's so many, like, aren't you like really worried? There's this Binance topic, there's like Genesis, there's Grayscale. If the Grayscale conversion happens, we would see billions of dollars of Bitcoin being sold because they have been sold already. They're just waiting to be sold. Right now, they just can't be because they cannot be executed. So like, why are you even long Bitcoin, right? Or why even long crypto? And I'm like, because it turns like this. It goes like this, right? And so I would 100% sure have enough skin in the game that if crypto rips from here, you have to feel this in your portfolio, right? But I would not have that much in my portfolio that if Bitcoin or crypto goes another 50% down, that you're really going to struggle to survive, right? So that is that balance, right? And so for some of you, this means, hey, you know what? I can be 75% of my funds in crypto because I don't care. I'm young enough. You know, I don't have enough, like I don't have a family. I don't have to, my expenses are super small. If my 75 drops to 40% down, who cares? I can hodl this through. Fantastic, right? You're doing everything right. And for some of you, this may mean you have 10% in crypto, right? I just think it's really, 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 really dangerous if this number is getting too close to the 100% or too close to the 0%. Fabio.
100% personal finance and the risk and allocation size are detrimental. It's super important to manage this well. Like the thing that the dominating theme that sticks out to me is there are so many things that are seemingly colliding or coming together within a year or so. And I think we are going to be a lot smarter a year or 2 years from now. But what is interesting to me is we are in a pre-election year is coming up, and historically, pre-election years are the most bullish years for the stock market, because the Democrats want to stay in power. They want to have another 4 years, and the economy is important. So usually the political pressure to ease is very high. But now you kind of have high inflation. They want to push inflation down, which is also very important for the political agenda. You have real estate hanging above us like this dark cloud, especially commercial real estate, which of course is going to trickle into residential as well at some point. You have the S&P, or the broader US economy, which kind of held up well considering the turmoil that we're seeing. So there's definitely a few dark clouds that are very likely to unload at one point. So in my opinion, I'm managing my expectations, and I'm still expecting lower equity prices, lower prices in real estate, and some, probably some credit events, some companies that are not going to make it because they're like zombie-like, and with high rates, they're just not able to survive. So there needs to be a little bit of a clean out. The water, when the water subsides, you can see who's not wearing a swimsuit. So I'm still expecting a little bit more of that. But as you said, in the long run, if you manage your risk accordingly, there is a bright future ahead. Crypto is doing great. Over the course of 5 years, of 10 years, we will look back at these times, and we probably gonna say, why didn't I bought more? But in the short term, it is very, very important to manage risk, so you can stomach the volatility. Yeah,
100%. And I mean, one point I also always want to make is, why am I such a big fan of dollar cost averaging? It's actually not because it provides the biggest returns. It actually doesn't. It's because it's the easiest one for your emotions. And that's the key thing to understand, right? If you're trying to time the market, the emotional part is so difficult. And many times that's exactly what's going to lead you to really bad decisions. So that's why I love the dollar cost averaging, and yeah, just playing the long game, like you mentioned. It's really good. Fabio, I think we covered everything on this. I looked through the questions, but I think it's all good. Any announcements, anything we need to make? Any kind of key things? I think service-wise, yeah, EuroC Vault is there. We have liquidity mining. We have been sending out surveys to the Cake elites that we have. What are the next steps? What are the next improvements of the program you want to see? So that's going to be really good. We're going to be working really closely with you on this. So that's quite exciting. So we really love that interaction. Yeah, and then we are already working on Q2 concepts. We're going to do definitely maybe not next week, but maybe the week afterwards. We should have the transparency report out. This time we should be really on time with this. So everyone is going to start next Monday with aggregating everything, and then putting out that transparency report probably the week after. So in the second week, I think it's after Easter. So that second week of April. Yeah, and then we can walk this through. Definitely, obviously, you should be seeing, I mean, we discussed this a couple of times. You should see a user experience revamp of the entire app by the end of the quarter. Obviously, more coins and services. So yeah, that everything works smoother there. Very strong focus, obviously, on working with you on the elite program, giving you those things that you want and giving us those things that we want, make this a win-win. But we're going to go into some of the details in 2 weeks. Anything that I missed, Fabio? Any kind of shout outs, any kind of key things?
So maybe for the people that haven't been with us on a regular basis, we're doing this every single week. And we talked about Binance and Credit Suisse and the real estate market and all of these things 6 months ago, 8 months ago. So there's a lot of alpha, especially from Julian's side, that you don't want to miss.
Actually, you're right with the alpha. I've been wrong on the alpha so far. I've been more beta. I've been more like risk off, not being wrong. You have been really good with the alpha so far. This year, you are the alpha person, not me.
Okay, thank you. One thing that I would like to mention for everybody that is not tuning in on a regular basis is Cake DeFi is not going to run into the same issues as Binance. We are taking a very careful approach when it comes to regulation. We never offered any services to US customers that we shouldn't. And we are really following all the activities and are very proactive when it comes to regulation.
And actually, we're not even open to US customers at all.
Exactly.
I think that was after Kraken, or I think with the beginning of the year, we stopped any kind of offering to US customers. Yeah.
And we have that with other jurisdictions as well. So I think we offer a lot of countries, more than 100 countries can sign up with us. Not every country, because exactly of the reason we don't want to run into unforeseen issues with a regulator. So we're more proactive and not walking around the bush as Binance did a little bit. And the other thing is we're doing great financially. You know, if you haven't seen our quarterly reports, we're currently working on the Q1 report of 2023. There's still a few weeks to go, but you will see this report sometime in April when Q1 is finished. And you might want to look at our other reports that we pushed out, for example, the last report in Q4 2022. Just if you don't want to go there, but we currently have enough money on the side fiat runway to, I think, pay our expenses for more than 3 years or almost 5 years. Without any revenue coming in. So both on a regulatory and a financial standpoint, Cake is in a great place. Because I saw a comment here on Twitter where Bitvestis said, I sent everything from Binance to Cake yesterday. Thank you for your trust. Yeah, I did the same. I don't hold any funds on Binance. I do hold a few or a considerable amount of funds at Cake because I can get some cash flow currently, depending on products, but up to 12% if you're using staking products.
Yeah, check those out. And thanks so much for summarizing everything, Fabio. Subscribe, like, share, comment. See you next week. Really appreciate you all. It's been fantastic. Thank you, Fabio, with all your insights. Looking forward to chatting again next week. Thanks so much, everyone. Have a safe week. Bye-bye.